We are back. The IPO market showing some new signs of life lately, leading some to suggest the activity will continue to pick up in the months ahead. Let's welcome in Ashley MacNeill, head of equity capital markets for Vista Equity Partners. Good to see you again.
You too.
Are we at that precipice now of some good things happening?
I think we are. We're coming off one of the busiest months in IPOs that we've seen in years. I mean, July had 10 IPOs for 4.3 billion, and the performance on average has been quite strong. So it does feel like we've hit that tipping point that you and I have been talking about for ages now, where the IPO market is starting to reopen in a very healthy manner.
I mean, some see the overall capital markets business kind of everywhere reopening. I want you to listen to what Brian Moynihan, CEO of Bank of America, had to say on this network yesterday. We'll talk on the other side.
The pipelines have been full. After the election, with enthusiasm of a new regime and a better regulatory regime, which is still coming ahead of us, a more robust thing, getting the tax law. So the pipelines have really been full now for 6 months or so.
Going to take the cap off the pipeline, so to speak, and start letting the things flow.
I mean, we have 150 IPOs in the backlog right now.
Wow.
And we are starting to see signs of companies that really have attributes that are investable by this market. We are finally in a very pro-growth focused environment, and we're having IPOs show real metrics that people can invest in.
You mean because we've gotten past a lot of the tariff stuff, so now we're focused on the deregulation and the tax cuts being extended, so we can start thinking about things that are going to grow the economy rather than stall it?
So I think we're transitioning from a predictable volatile environment to an opportunistic volatile environment, i.e. we have corporations and investors alike taking advantage of moments of reprieve of all of the things you talked about, the macro uncertainty, to deploy capital and to find real places to invest.
So let's talk about those places, because you suggest that the real action in terms of where the value is with the GenAI user, your wheelhouse at Vista,
yep.
Right? Software. Moving from the GenAI enabler, the hyperscalers. A lot of money's gone there, and valuations are stretched by some measures.
Well, you're definitely seeing in this earnings cycle, and I think at this point in the innovation cycle, value starting to accrue to those Gen AI users, not just the enablers. And in fact, I would even say, if you listen to the earnings transcript of Mag 7, they actually talk about how they've become Gen AI users and how that is adding both top-line revenue contributions, but also EBITDA efficiencies.
When you see the extraordinarily large numbers that the hyperscalers, since we're talking about them in part, are continuing to spend. Tens of billions of dollars they keep increasing their overall output by. What do you think?
Well, I think that the CapEx discussion is one that's going to continue to enter the picture. But as we've seen this market shift more to growth, I think it's really going to be about looking at the attributes, particularly in this earnings cycle, around how are you growing and is that growth durable? What is the metric you're using to quantify the return you're getting on that invested capital? And then specifically, what financial metric are you using to quantify your generative AI contribution, whether it's top line or whether it's your margin efficiency line?
How do you feel about the market overall? I mean, we obviously came a long way from the April bottom, but people use the word exhaustion, stalled, maybe a pullback of some magnitude is coming. How do you see things?
So I think we're coming into a very robust earnings season. We're about 2/3 of the way through, and we've had, 80% of the companies report a meet or beat on top line. We've had the most robust IPO month we've had in years. And yes, we've had some mixed economic data, but despite that, we're continuing to sort of push through. Look, historically, you've had a lot of guests come on and talk about how August and September are difficult months for the broader market. But I think from a tech perspective and from a pro-growth perspective, we are entering a very exciting time, not just for deal making, but also for the broader market. So if we have a little bit of a pullback, I'm okay with that. I think I'm in your buy on the dip type crew.